Exchange-traded funds continue to grow in popularity. According to data from Charles Schwab, retail ETF assets grew 61% in 2010, and ETF assets overall grew by 34% at Schwab to $111 billion by the end of the year. Today, Charles Schwab released a new tool for their clients called the ETF Select List to help wade through the universe of funds and find the most bang for the buck. Let's get a first look at the list with Michael Ikini. He is investment manager of research at Charles Schwab Investment Advisory. His division developed the methodology for the list. Universe is a pretty good name for what's gone on with ETFs, Michael, because it really has become that. There are so many. How did you wade through this list and narrow it down to your select?
Well, that's exactly the point that we're trying to do here, because there are so many, it's a little overwhelming for investors. So what we did was we tried to come up with a methodology that would let us pick one really good ETF at a low cost that's well diversified for all the different parts of the market that investors are looking for ETFs in. So we're looking for ETFs that are liquid, that have low expenses, low bid-ask spreads, and also low commissions for clients who are trading online at Schwab.com.
For the areas that have grown the most, certainly commodities are one of the spaces we talk about. How often do we mention the GLD, for example,
sure.
Right? How do you pick one there? And what do you have to be careful of if you're an investor?
Well, the way we pick one, it's the same way we do in other categories. We like that low cost, good structure, good diversification. So we like to pick a fund that's very well diversified across all commodities. We have a fund there, DBC, the Power Shares Fund, that tracks the Deutsche Bank Optimum Yield Index. But we also have other commodity ETFs as well. We do have a gold fund, although we have IAU instead of GLD,
right,
as well as agriculture options and base metals too.
But the bottom line, I guess what I'm trying to say is that you need as an investor to know, especially when it comes to commodities, whether you're talking about futures or the actual commodity itself.
You got
That's
it.
probably the most important thing when it comes to investing in a commodity ETF.
The issue that a lot of investors have discovered is called contango, as I'm sure you guys have talked about a lot here. And if you're holding a physical ETF, which you can find for some of the physical metals, like gold and silver, then you can find an ETF that won't have that contango problem. But when markets are in contango, when that futures price is higher than the spot price, contango is going to be an issue as you roll those futures contracts forward. So we like to find an ETF that tries to follow a structure that isn't as vulnerable to contango.
What did you find to track the total market?
So for the total market in the US, we actually have one of the Schwab ETFs there, the Schwab US Broad Market ETF, SCHB. And we like that one because it is one of the lowest cost ETFs in existence at 6 basis points. And
doesn't have anything to do with the fact that it's a Schwab product?
The Schwab angle actually follows because clients don't have to pay commission when they trade it on Schwab.com. So this list really is for helping out Schwab clients. Avoiding commissions anywhere you do it is a really great thing to save money.
Are there too many ETFs? And I mean, is that the bottom line of the issues, then the risks that come with ETFs? The fact is they have just exploded over the last couple of years. Your own place, we said, what, $111 billion?
Yeah, 118 at the end of February. Yeah, a lot of ETF assets, almost 1,000 out there these days, right around that mark, especially if you add in ETNs. And investors need help. They really need to know, okay, which one should I be buying? I'm a little bit worried that I'm going to pick the wrong one. So we're there to help them out. Here's a good one that we think is going to work for you.
Michael, good to see you.
Thank you, Scott.
Thanks for coming in.